Welcome back to Business Line. Aarti Krishnan, Research Head Business Line newspaper, joins Rajiv Lula for a discussion on IPOs.
Thanks, Pranav. The IPO market seems to be reviving after a long hiatus, with several offers lined up over the next few weeks. So how should an investor make a start with IPO investing? How is it different from investing in the secondary markets? We take you through some of the basic rules to help you decide. And guiding us along this way is Aarti Krishnan, Research Head at the Business Line. Welcome, Aarti.
Good to be back, Rajiv.
So, Aarti, tell us, what is this investor fancy about IPOs?
People who invest in initial public offerings, which is really the expansion for IPOs, hope to make several times their money if they stay invested in that company. Companies which seek to tap the markets with IPOs are hoping to expand their revenues and profits several times over the years. They will be raising funds to fund projects which can really scale up their business. So what investors in IPOs hope is that they can ride on that expansion and make a lot of returns from the investment that they make. Infosys is one often quoted example of an IPO that has made many investors into multimillionaires. That's not the only instance either. There are many companies which are listed today which have turned out to be multi-baggers for their IPO investors. Take the case of Bharti Airtel, many investors would know about it. How the telecom company made an IPO at 45 rupees in 2002, and today if you adjust for the bonuses and so on, that value has appreciated to say 660 rupees. That's a magnificent return, and many investors would like to get that kind of returns from their portfolios. So that is what actually leads to the investor fancy for IPOs.
Right. Now, one of the factors that investors have in mind is also listing gains.
Yes.
So if you could help us understand that jargon, what is listing gains and what's in it for us?
Yeah. When a company makes an IPO, it offers you shares at a particular price, say 40 rupees. Now, when the share actually starts trading on the stock market, the market may fancy that stock and it may discover a price for that stock which is much higher than the offer price. Say if you subscribe to the India Bulls IPO at 40 rupees and it starts trading at 60 rupees, you have a neat IPO gain of a listing gain of 20 rupees on each share that you bought. Now, listing gains are not guaranteed with IPOs. In the bull markets of 2007, it was not unusual to find every IPO actually listing with a gain, because investors would just pile on to the stock the moment it listed and bid up the prices. But in today's more sober market conditions, fewer IPOs are delivering listing gains. In fact, Adani Power, NHPC, some of the recent IPOs which have come out are trading below the offer prices. So investors should not really bank on the listing gains. It may be an additional bonus if the market does favor the stock that you pick up.
Interesting. Now, definitely there are about 6,500 stocks being traded on our markets. There's a whole lot of companies out there. All of them have been IPO at some point in time. Tell us, how is that secondary market of stock picking different from this IPO picking market? What are the differences?
I would say picking IPOs is far more tricky and far more challenging than actually picking a stock from the secondary market. Because in the secondary market, when you begin investing, there are tons of information about every company. You can go to the BSE or NSE, check up the company's results over the past 5 years, check up how the stock price has moved. You have 52-week highs and lows, so much of information. But with an IPO, it's essentially a new entity which is entering the market, and they will just tell you how they have fared in the business over the past 4 or 5 years. And all the information you can have from the company is embedded in the offer document that they give you, which is a fairly bulky document and not easy to read. So basically, in an IPO, you have to start from scratch in evaluating how a company is going to do. So the key to evaluating whether you should invest in an IPO is to decide whether the business holds good prospects over 5 or 10 years. Say if you have a Pipavav shipyard coming with an IPO, you need to know how the shipbuilding business will fare over a 5-year period. How are the companies already listed in the shipbuilding business doing? It's obviously not easy.
Now, another factor that comes to mind when evaluating IPOs would be management bios, right? I mean, yes, you don't have any history of a company, you don't have 52-week averages, of stocks and all, but you do have bios of these executives or entrepreneurs that are getting together to form a new company that's going IPO, right? Where do you find that kind of data?
Yes, the offer document actually is a very comprehensive document. In that you would find information on what the company has been doing so far, a 4 or 5 year track record of financials, details. What are its business plans? What is the project that it plans to set up? How does it plan to fund the project in terms of mix between debt and equity? And also the management bios. You will have a fairly detailed history of who are the top management, what are their credentials, and even some information on their ability or experience to run this particular business. So if you use all that as an input, evaluating an IPO becomes fairly easy.
Great. Now, Business Line, the newspaper, also did a recent study on IPOs just last week. Tell us a little bit about that study. What was the methodology? What was the outcome?
Typically, there's a misconception in India that IPOs are always multi-baggers, and there's a lot of rush to get into IPOs, somehow secure the allotments. The people borrow to invest in IPOs. So that study basically showed you that in IPOs in India have not done as well as people really think. We looked at all the IPOs that came out between 2000 and 2008 because the later ones do not have sufficient track record to evaluate. So if you look at that sample, we found that 1 in every 2 IPOs is today trading below its offer price. Now that seems like a very drastic number to put out, but that's partly because IPOs tend to get bunched up in bull markets, and a good number of the IPOs over the past 7 years, in fact, were bunched up in 2007 and 2008, which were the recent bull years. So when prices crash in the secondary market, the stock that you invested in the IPO also would see its price crashing. So it's purely as a result of that. The other finding of the study was that only 3 out of 10 IPOs managed to get to a 15% return that people typically expect from a stock market investment. If you don't want a 15% return, you could go for an FD or some other investment, right? So the study was an eye-opener in the sense that it showed that IPOs did not do as well as people thought, and people have to be very selective in choosing their IPOs in terms of vetting the business carefully and so on.
Arti, there's a whole lot to talk about in this issue. I think we would want to understand how to evaluate individual IPOs, what are the criteria. I want to take a deeper dive. We'll have to come back to that next week. Thank you for being with us today. Pranav, take us away.
Thanks, Rajiv. Don't go away just yet. We have an interesting discussion coming up. Mr. R.R. Nair, who's the coach for CEOs, shares some of his experiences and ideas with us.
நான் விரும்புவதற்கு மட்டும் பணம் செலுத்தினால் நன்றாக இருக்குமே. அறிமுகம் ஏர்செல் பே பெர் செகண்ட். எத்தனை செகண்டோ அத்தனை கட்டணம்.
Heavy monsoon showers flood roads in Chennai. The Deputy Chief Minister reviews the situation. The opposition AIA-DMK stages a demonstration to support demands by TASMAC workers. And India will take on Australia in the 6th ODI tomorrow at Guwahati. All of these stories and more tonight on Night Vision.
Welcome back to Business Line. On the sidelines of Rotary Managed 2009 recently, Rajiv Lula caught up with the coach, and guess who he coaches?
So now we are joined by Mr. R.R. Nair. He is an organizational development consultant and a CEO coach. Welcome, Mr. Nair.
Thank you. Thank you, Rajiv.
So the first question I want to ask you is, since you are a CEO coach, tell me what's leadership?
Well, fundamentally leadership is essentially a process to take an organization to its desired goals and objectives. And an effective leader is someone who sets certain vision of the future, a desired sort of a outlook of the future of the organization. And the funny thing about leadership is that you can't have leadership without having followership. So how do you actually energize, enable your entire team willingly and enthusiastically to follow the steps of the leader? That's one dimension. Therefore, it seems to me that effective leadership is all about dealing with the vision of the future, setting primary agenda for achieving the vision, and mobilizing commitment of people. And in that process, the leader also is an exemplar of his or her personal values and beliefs. The so-called leadership is something which is only restricted at the CEO level. I'm a strong believer of distributed leadership. At the end of it, the one who is actually supervising a team of salesmen or a team of workmen or a team of, say, techies on a project, at the end of it, he or she is also a leader in the truest sense. So to that extent, if an organization has to fulfill its vision and dream and purpose, it's important to have a collection of leaders at all levels. And the leader's task as a CEO leader is one of also making sure that you have a robust leadership pipeline, identifying high quality performance, making sure that you also spot talent for potential, and how do you harness both performance and potential so that you groom them to leadership role. So in a way, there is a sort of a template through which a young guy who comes in as a sales supervisor becomes a sales manager, moves up to the next level. And also, as he moves up in his career and in his own development, it's important also to acquire breadth of experience. Because at the leadership role, as you move up the ladder, you're actually looking at strategy. And strategy is not just functional strategy or domain knowledge and expertise, it's actually breadth and depth. So that, I think, is the way I would really look at it. That, that values are important, vision of the future is important. It's all about performance and effectiveness, and it is not concentrated only at the CEO level. So in a CEO coach scenario, you are really concerned about his direct reports leadership, and then direct reports plus one's leadership. And sometimes we go down and say, hey, if there is an issue at the marketplace, what about the leadership at the marketplace? Right. You can't tackle the leadership issue at the top without addressing the leadership issue at the front end.
I also wanted to ask you about how do you measure some of this progress? Do you see us moving in that direction? And how do we measure our progress?
This is aided by a whole set of psychometric tools which are available, which can assess different facets of leadership and leadership styles and leadership effectiveness. Leadership effectiveness is also measured through the 360-degree process. We find more and more corporates and enlightened ones are saying that, look, leadership has to be viewed in the context of multiple perceptions about one's effectiveness. So I think 360 as a very effective tool is something which is now being widely used. And probably lastly, at the end of it, effective leadership must in fact demonstrate effective performance.
Yes.
So large company systems are really looking at P&L responsibility being pushed down to as lowest a level as possible. So that in the distributed leadership concept that I talked about, at all levels you can actually sort of differentiate between a successful leader who is able to produce superior results versus someone who is not so successful. So you don't have to test it out only at the CEO level. Maybe at the front end it is possible for it to assess in terms of performance. And I think we have come a long way. And I would really say that probably more work is required to be done in the area of measurement of leadership effectiveness.
Mr. Nair, another topic that's interesting in leadership is mentor-mentee relationships. Do you see that dynamic kind of developing in the industry and in the government sector?
I think until recently, maybe until about 10, 15 years ago, having a coach or a mentor in a larger sense, because you also address, you really find that if you are asked to adopt a mentor, it was seen as something which is an unacceptable suggestion. Because something is wrong with me, why the hell somebody should suggest that I need to have a mentor? I think we have come a long way. Today there is greater level of acceptance of mentor and mentoring. And if you were to ask whether in government and in the public sector establishments you find this is prevalent, because I think your question was directly linked to, I find in the Indian School of Business there are more and more large public sector institutions are coming in, using 360-degree as a basis for enhancing leadership effectiveness of their top managers. And mentoring is now getting adopted in public sector enterprises, which I think is a good. In the private sector, especially the multinationals and the large Indian houses, there is greater level of acceptance. And this is not driven by just the fad of having a coach or a mentor as a luxury, not at all. But fundamentally, it is a business requirement. As the business grows, you need a robust pipeline of future leaders. And if you find there is a shortfall, Typically, for example, look at an organization where the average age of top managers is about 55, and if their retirement age is at 58. You have a situation where if you have not grown leadership from within, you need to accelerate them. You need to actually profile them around a set of leadership competencies. What are the key differentiators in terms of leadership effectiveness? And then you need to have the very senior people to play the role of mentors. So it is not necessary that you need to have people from outside coming in as mentors. But then those senior people need to understand the mentor-mentee relationship. What are the dynamics of that relationship? How do you help? Because essentially this whole process of mentoring, coaching is a helping process. But I find there is a greater inclination for them to really come out and say, hey, I don't know very much about mentoring, but I think if there is something that I need to learn, I'm willing. And I think that sort of positive attitude is something which is extremely helpful.
Lots of deep insights there, and definitely, personally, I learned a whole lot. I'm sure so did our audience. Thank you, Mr. Nair, for being in Chennai, for joining us on our channel today. Pranav, take us away.
Thanks, Rajiv. And now we go across to meet a young actor who knows who to emulate when it comes to his financial planning.
Young Jiva might be concentrating on just being a good actor right now, but he certainly intends following in his father's footsteps. And if Super Good Films is an indication of his father's wise financial planning, Jiva looks like he's on the right track.
Money is something very important in life, and emotions, everything comes after money, I feel so at this point of time, because the world has become so mechanical and so money-minded too. So today I'm here at my studios for sure, for building up this kind of a studio, and for building up my own career, and for giving life to a lot of people. So money is very important. It's very important because I've been always following my dad's steps, and he's been very calculative towards his life, and me, for being an actor, to promote his son, he could have done a lot of stuff, but still he was very calculative at that point of time. He could have casted a big director or a big music director at that point of time, but he had a lot of money, but still there's some kind of a limit for anything, so you try to put something in the well and everything goes, so nothing is behind. So he's been very calculative, so he's been building his career and my career and my brother's career and everybody's career in a very calculative way, like step by step, step by step. So it's been like that. I invest in a lot of stuff, especially shares and sometimes gold, and sometimes for a film person, I come from the film fraternity, so for sure today this studio is like fully I invest on my studios and a lot of technical aspects. Future does a lot of stuff, probably cameras and a lot of stuff.
Always diversify your investments to keep it safe. That's all we have on Business Line this week. But do join us next week for your weekly business update. Do send us your comments on feedback at ndtv-hindu.com. Goodbye for now.